Hello everyone. Today is Monday, March 16th, and it's just a little after the 3 o'clock hour, and usually where I am, this is where I wait to trade, and I have the AutoTrader set to trade both directions. There's good volatility in both directions, even though I am biased to the short side for the market to sell off in the last hour. But, and we just got filled short. I have it set at 1,050 just to allow for a little bit of slippage. So you can see the target down here. You know, this doesn't seem like much here, much distance, but it just goes to show the volatility. So it's quite reasonable that the market could swing this way if it sells off to the downside. And if I'm wrong and it goes long, I'm willing to absorb a few losses and let the AutoTrader trade. So let's see how this unfolds in the last hour of trading. I'll be back. Okay, so I wanted to bring over the FibGrid. So we have a new week here. You can see the open of the week here, and the previous bar came down to the low of today's developing value area. We came down to 150% of the weekly range in the first hour, and came up to the open as resistance, but notice first resistance was at 100% of the range. That's where the high of this bar was, and then this bar resistance was 150% of the range. And then notice on the way down how this kind of respected the FibGrid kind of support here at 100% of the range. I don't have the smaller numbers drawn in here, but yeah, all these 30-minute bars, with the exception of this one, were down from here, this rally here. So I'm banking on rally on the sell-off into the close rather than rally into the close. I could be completely wrong about this, but we'll see how it goes here. I think if it does sell off, I would expect the market to come down to 7170 area. I thought it was going to do it here, but it stopped at the round number 7200 level instead of going all the way to the 150%. But if this bar comes down to the, at least the low or close of the previous bar, or exceeds this bar, then I would expect it to extend here. And then next stop would be the 7050 area. So as you can see, it's quite a fight here at the 7300 level. Selling down as much as 7290. Once it gets below 7285, I think you'll see a push down. If it can get below that. Well, it just did as we speak. And so let's see if they push it down to our target. I just realized my time and sales is on the March contract, so let me fix that. That was duh. Okay, there we go. Now we're on the June contract. Okay, they're coming close. We only have to get to 5950. $10. Wow, it came all the way to 61. Here they come. As Trader Jim says, here they come. Ah. Wow, what volatility. It's unbelievable. This is what's so difficult about trading. I think it's wise to... This kind of scenario happens so often where the market comes within just a tick or two of your profit target. I think it'd be wise to have like a percentage trailing stop once you get within like 10 ticks of your target. And I really need to work on my money management and trailing stops to really fine tune, because this kind of scenario here, coming within a couple of ticks of your target, is just it's hard to take. Okay, we're stopped out. It's really a shame because we had, I don't know how much profit here, $800 or $900. And I don't know if it's going to get above this level and go long. But I'm going to force a short here. Now, this is really a shame that not only did we come close to our target by a few ticks, but we got stopped out by a few ticks. So I'm going to move this down just a little bit and try to make up our $1,000 goal. This will be interesting to see if this holds. Wow. Okay, so by moving my stop down, I think we hit our goal, and we had some slippage here, so I'm just going to accept it at that. So in spite of this losing trade, I kept my guns and just barely hit a profit target by a tick. I mean, we almost hit it here by a tick or two, and then took a relatively small loss considering the volatility, and then the market pushed down to the low of this bar, which appears to be about 72.39.50, and I had dragged my stop to 72.45 to give it room to hit a $1,000 goal, drag my profit target, and then this bar bounced 72.44 up to 73.07. So that was really an interesting trade in spite of this loss, and again, tremendous volatility, but with the exception of forcing the short here because I still believe the market would sell off, just let the auto trader trade. And so we did hit our goal for the day, and hopefully y'all can see the potential of the auto trader. Okay, I wanted to come back and do a recap of this trade and the close of the market, and also show the FibGrid. So it's about 4:26 p.m. now, and here's the trade here, and I just want to kind of review what happened here. The auto trader took the trade. This was taken by the auto trader. I didn't force the trade here. The problem with the trade, the lesson to be learned here, is that in this kind of volatility, and it's hard to know, trailing your stops too tight, because we almost hit our profit target of 1,000. It was a fairly modest profit target in this volatility, but 1,000 on one contract is pretty darn good by anyone's standard. Anyway, we just missed our target by a few ticks, as you can see in the video here. The video displays that, and then we were stopped out by just a few ticks on the upside of these bars. So had the stop just been at the volatility stop, I wouldn't have got stopped out, and then I wouldn't have had to take this second trade, which I did here, and I actually dragged my profit target a little bit lower so that it would make up for this loss, and that worked out pretty good. We ended up with 930, and I'm guessing we had $70 slippage when this trade closed. And of course, right after that, the market rebounded sharply. This is a low of 72.44 to a high of 73.06, so that's about 60 ticks. And then right at, there was a pretty sharp decline here from 3:30 until 3:45, so 15 minutes of that, a little bit of a rebound, and then a very sharp sell-off in the last 10 minutes of trading, dropping 300 points or 1,200 ticks. So from a high of about 72, actually 72.66, to a low of 69.06 there. So about 300 points or 1,200 ticks, very sharp sell-off into the close. Another takeaway from this is I hope you all can see the value of an auto trader in not only these kind of conditions, but any kind of conditions. There were tradable swings throughout the day, all day long, lots and lots of tradable swings that would yield $500 to $1,000 or more. This is a 987 tick chart, bringing over a 500 tick chart. You can see how it looks a little bit different. And I wanted to show this chart because this was, I just let the system trade all day, and although there was some winners and losers starting from the open, it ran up to 852, and the max drawdown was only $300 here. And then it was pretty much up from here, a series of a lot of small winners, most of them getting stopped out. So even so, my settings were just a little too tight here, but it ultimately made it to its goal of $2,000, I guess, with some positive slippage. So here is the settings here, sensitivity of 1, and it is using the step MA filter, which I forgot to change here, but precision trend exit set to 0, and then a goal of 2,000 trading a single contract, a limit order with a 4-tick pullback, and trailing by bars at 130 ticks with a 5-tick offset, and then actually trailing by 65. So once again, I did not spend enough time on money management on this. In spite of that, it worked out. I should have hit my goal much sooner with better money management. As you can see, some of these trades here went much further. In any case, this is pretty good for fully automated. Absolutely no discretion used on this chart, trading a single contract. But note that it's much smoother on the 987 tick chart in this volatile market. Now I wanted to bring over the FibGrid here, and this is the daily FibGrid. So it's interesting to note that the market gapped down to the 100% of the daily range, and then first came up and found some resistance here at the 50%, and then some resistance here at the open, and then went up to 50% of the daily range on the plus side, and then a little bit of support at the 23% level, then support again at the open, and then resistance at the open. This would have been a great short right here. And then again, resistance at the opening price. So this really shows the importance of the opening price being one of the most important prices of the day. Look how many times it provided either support or resistance, where support became resistance, which is an excellent setup for a trade. When support becomes resistance, that's an excellent trade opportunity. So you can see that here, and then also right here, and that was the last time it happened. But when the market sold off, it went to the 50%, back up to the open, and then down to the 76% here. You can see just a little overshoot, and then sold down to the 100, and then ultimately to the numbers on the 150% extension of the daily range. So remember, these extensions here is the daily range, the average daily range, and we're going back 31 days, which is a pretty good number to use. And so this is 100% of the average daily range for the last 30 days, 150, and then 200. So the FibGrid can be extremely effective as zones on your chart, and that's how you would use that. Market respecting these levels very much. Notice last week how it came up to the 100% of the range as the market rallied into the close, and then notice the support here, support and resistance hanging at the FibGrid levels. Okay, same is true on the weekly FibGrid. What you're looking at here is this is the overnight session. This is Friday's close, and when the market opened up at approximately 5 p.m. Sunday, it tanked immediately and was limit down on this bar, and then this is all empty space from the night session. And then when the market opened up, it gapped down and sold off immediately, and trading was halted again. And then it rallied up to the open again. The open being supported resistance. So the weekly open here, and then on the 30-minute chart, you can see it was pretty much down all the time after this rally, but stopping at 50% of the weekly range here. This first push down, 100% here. This 30-minute bar came up to the 50%, then up to the open, and then down to the 50%. Two 30-minute bars here stalled at the 76, then down to the 100, then back up to the 50. I mean, it's pretty incredible that these numbers are almost to the tick, or very close. And then after this failure here, this was the 3 o'clock hour where I took that trade. There was a sharp push down all the way to the 200% of the range, and that's where pretty much the market found a bottom for today and then rallied up to the 150% level finally. So on the weekly chart, this is very valuable in forecasting where the markets are going in volatile markets. This is a great way to create zones that, similar to the method that Trader Jim uses, although completely different in how we arrive at the zones. I think it's a very accurate and legitimate way to find those zones of support and resistance on your chart. Okay, that's all for this video. It'll be interesting to see what happens later this week.